Let's welcome Paul Bassi. He is the CEO of Real Estate Investors PLC. Paul, welcome to the show.
Hi.
As I always ask CEOs, what football team do you support?
I'm a football fan rather than a football team fan.
A generalist.
Yeah, generalist.
Well, okay, so I've got a load of notes here, which are quite extraordinary. Headlines are that you are a London Stock Exchange listed real estate investment trust with a portfolio of 1.5 million square feet of commercial property in the Midlands, property market across all sectors. And basically, you've just had your final results as of the year end December the 31st. Pre-tax profits up 37%, record underlying profits up 20%, gross property assets increased 5%, revenues up 10%, contracted rental income up 9%, and so on. I've got a Liberum note here written on the 20th of March suggesting a buy rating, target price 70 pence, published at a price of 53.5 pence. This is all good stuff.
And so it should be. We've been working very hard at this business. We've got a very experienced management team and we understand real estate on our patch. So we're building a long-term business. So the performance this year is absolutely in line with management's expectations, and I expect it to continue in this sort of vein going forward.
So how did you get involved in this business?
Well, I've always been in real estate from a young age. Then back in 2006, I built a portfolio up and sold it, and property became very expensive. Well, if you can't buy property because it's too expensive, you look to buy companies that own property, and that's how we bought into REI originally. When the FD and I got involved, the market cap was a couple of million. The portfolio was about 20 million. And here we are 10 years later with a market cap of over 100 million and a portfolio of over 200 million.
So why the Midlands?
Well, I was born there. It's my patch.
Right.
But most importantly, this is the unique bit. We run estate agency businesses and we get market intelligence from our network, which we've got. And that tells us who's buying, who's selling, where the marketplace is. And those relationships allow us to secure assets that we believe we can add value to.
Right. Now, in terms of the Midlands growth, we've obviously got this new fancy railway being talked about. Is that going to help the area massively?
Yeah, I mean, the fancy railway, as you put it, is only a small part of what's gone on. And I have to say, in all honesty, where we are today is luck, because I don't believe anyone would have coordinated getting the Commonwealth Games, getting HS2, getting HSBC, getting a new train station, winning the Commonwealth Games, getting the City of Culture. This has just happened to have come together. And I do believe London has had a great 50 years of prosperity. Governments are going to have to look after the regions, and I think Birmingham is at the front end of becoming the powerhouse that it once was again.
Well, it is the second biggest city in the UK, isn't it? But I did read a few years ago that in terms of the numbers of jobs created, it was something like 1.2 million, but from memory, about 1 million of those were in the public sector. So a huge sort of concentration of government workers.
Yeah, I suspect that that's historic. Birmingham has reinvented itself significantly over the last 3, 4, 5 years with all of that I've just shared with you. We are now about HSBC coming there. We're about the inland revenue moving there. We're about the growth of tourism there, financial services. And you have to remember that Land Rover and car automation, and particularly the approach to electric cars and batteries, it's all being dealt with, managed, manufactured in the Midlands.
Right. Now, how do you grow sort of assets under management? How do you continue to grow them?
We add value to what we own.
Right.
So in terms of growth to me is rental income going up and valuations going up. It's not just owning more property. But as I said before, we are uniquely linked to the real estate community. That allows us access to opportunities. We sit on a lot of cash. We employ good professionals and we capture opportunities when we see that they're right for the company.
Right. They're talking of cash dividends.
Yes, yeah. We're a dividend business. We're a REIT. The management have invested £10 million in this business, so we don't come along and think this is a great idea without putting some skin into the game ourselves. So our dividends have now grown 5 years year on year, up 19% this year, and I expect us to continue going forward.
Obviously, we've seen a situation with Hammerson this week. Okay, is there any chance that somebody would actually come in for you?
There's every chance that somebody could come in for us, but we are a business that's worthy of somebody looking at it. And if somebody wants to buy it and it's in the interest of the shareholders, we will consider that. But it won't be at the share price where it is today, because we're trading at a discount. We're a very successful little business, dividends very strong, and if somebody wants to buy a company, they'll have to pay a full price for it.
Right. Two final questions for you. 2018, is it just more, continue as normal?
Yeah, I think as a business, it's more of the same. We're not going to, we stick to our knitting. We're good at what we do. It's what we understand. But I think more importantly, the economy in Birmingham, not just 2018, 19, 20, but I think we've got a very, very bright future ahead of us. So I think that with that backdrop, we will continue to prosper.
And is any of that correlated to how well the football teams do?
Let's not talk about the Birmingham football teams. Yeah.
Okay, I always ask this, hedge fund hat on, why should I consider, three good reasons why I should consider having the shares in my portfolio?
First of all, we're a strong dividend play, so up at 6.5%, that's a good return.
Yeah, very attractive.
Secondly, we're a capital growth business. We add value to our assets. We're not a passive buyer who sits there taking income. But more importantly, I think it's to get in early with a Midlands renaissance around real estate, industry, manufacturing, and I think the next 50 years could be a great 50 years for the Midlands and the UK regions.
Paul, on that note, thank you very much indeed for your time.
Thank you.